Hello, Mr. Chris Frostad. How are you, sir?
Very good. Thank you, Mr. Gordon.
I'm glad to hear it. Well, here we are for our weekly chat and being blinded by the sun. Sorry about that, folks. I'm going to talk about a bit M&A. There's a bit of M&A happening at the moment, and I think some of it, so far, quite good stuff, but that isn't always guaranteed, is it? So we're going to talk about maybe some of the players out there, the producers, the developers, even some of the explorers, and maybe we'll talk about maybe what M&A could be happening. We'll talk about what good M&A looks like, what not so good looks like, and perhaps the cost of that and how people choose to finance these things and what they hope the impacts will be. So over to you. Why don't you kind of sum up what we've seen so far, and maybe we'll work out.
Well, certainly last week we saw ISO pick up Anfield, which was interesting.
Yep.
I never really internalized how close that mill was to those assets, let alone the fact that it was actually built for that mine. And I think that is a bit of a, I don't know if people realize what a game changer that might be for ISO, because it's, we looked at those assets a while back as well, and the big nut that was always hard to crack was the transportation costs back to White Mesa. That is a big part of your cost, and to have a mill right next door, one that obviously is going to take some capital to bring it up to speed, but I think it's that could be huge.
I think it is huge. Look, it definitely wasn't the right thing for Anfield, because you're talking 50 to 100 million bucks, and those guys, not a big market cap, not really kind of big shakers in the finance market. Them trying to get a hold of that money in a way which should have it's always going to be dilutory, but it certainly wouldn't have been cheap either. So I think that for Anfield, it was a stretch too far, and a promise. Promise overmade over the years. They're just hanging on for dear life. But I think in ISO's hands, it makes a lot of sense. One, they get access to capital. Two, you've got a mine right next to them. Literally, it's a shared driveway for the first, half mile. So it's been clear there. So I was kind of less enthusiastic when it was an Anfield story. I'm very enthusiastic within the hands of IsoEnergy. So I think that's definitely one of the goodies. Given we were talking about it last week, right?
Who else have we seen? We've seen Fission and Paladin. But they're running into problems with the government. I guess Canada's put them under national security review. So they've got a lot of hoops to jump through. But it does put Fission in an interesting place. Even if this doesn't go through, they're in play. So there's some folks you can look at with regards to what happens with Fission if this doesn't go through. I think there's a good chance it'll go through. But
well, I don't know. Yeah, I hope it does. I mean, we're talking Paladins, Aussie company, should be fine. Friendly folks rather than foe. But the Canadian government are doing funny things at the moment, it seems. So who knows?
We do. We don't like to let go of things. So, well, actually, we've let too many things go. I think that's what's happened. It's a bit of a backlash from a lot of significant mining companies that Canada's sold off over the years.
Yeah,
there's that.
And I think obviously the China, the Russia, etc. factor coming, and Kazakhstan factor coming into play here. It is as adversarial as it has ever been in the last 5 years. I think. So Section 30 was it Section 30? What's the thing that I've literally forgotten the section number that both Energy Fuels and UREnergy had to go at.
Right. That's right.
Losing my mind. So anyway, so it is adversarial at the moment. It'll be interesting to see what M&A gets challenged, what does not. But I think there's some more obvious ones. Like if you look at the way that UEC has been playing the game in the last 5 years, it is all about M&A and building up a big portfolio. Denison followed suit there, and it did equally well in terms of market cap, etc., share price. So I think that's good. There are others trying to emulate them. I think ISO seems
depends on how. I mean, see how Energy Fuel, how far they want to go, right? You know, like ISO talks a lot about focusing on Canada, the US, and Australia, staying in that Western time zone, if you will. You know, UEC, I don't know whether they're necessarily going to stick to that sort of mantra, but there's certainly things they could do. As we mentioned a few weeks ago, Denison would be an interesting matchup for them because of the work they've done up in Canada already, or the UEC is doing anyways. Now, Laramide might be an interesting pickup for UEC as well because they're in they're in the right jurisdictions and things for them.
Well, I mean, I'm not sure. I can't see Laramide. I don't know. It's an interesting one. You just don't know what is going on at the moment because I think some companies have taken advantage of the market. Others have not. Others aren't able to tell a story of any kind of near-term manifestation of their hopes and dreams. I think if we look at Laramide, obviously they've got their stuff going on in Australia at the moment. You've got the Aussie elections happening shortly. You know, expectation that Labor government will be boosted out, well, everywhere but Western Australia. And, you know, that could have a positive impact on driving some of Laramide's focus over there. They've obviously picked up the asset in Kazakhstan, you know, close to and in the headroom of Kazakhstan, probably not quite, but that's what they wish. And then obviously, what's happening in the States as well. It's a lot of moving parts for a
and it's also interesting because
company.
Most of these companies are looking to produce for the first time, so you have to kind of wonder how much they want to take on, in this market too, because it's there may be some opportunities to put things together, but sometimes you can have a little too much in your hands.
Do you think that's true though? You know, if I look at UEC, if I look at Denison, you know, if I look at Energy Fuels, any of the guys who've been talking the game of getting into production soon, you know, haven't really wanted to.
Yeah, well, but they're probably the ones that could pick up. I mean, the ones you just mentioned are probably the ones that could pick up something a little earlier, something a little more ready for prime time, I guess, but something they could move forward with. Well, Incore's interesting because really they're one of the only ones really producing right now. They had the big grand opening at Alta Mesa last week. George W. Bush was there, and they had about 300 people show up for that. So they're finally. Between them and Energy Fuels, it's everybody else is just waiting for a better price or for things to get ready to turn a switch back on.
There's been this sort of game played, right? So Encore obviously great. UREnergy, I would say, starting to move through the phases as well in a much smaller way, but it's getting. I want to be seen as a producer. Well, how much are you going to produce? Oh boy. That's hardly touching the size when it comes to revenue, but it says I can produce at least. So that there's different sets of signals that need to be sent out by these companies, whereas the bulk of what they're doing is maybe exploration still with some development assets. So again, how does the market react to that profile?
Now you were down. I mean, Energy Fuels just finished their acquisition with Base, right? Which is more rare earths, and you were down there. You said you're quite impressed with that, with the operation they've got going on down there.
Absolutely.
Would it make sense for them to start picking up some of these guys and rolling them up?
I don't know. I mean, it'd be quite a stretch on their balance sheet. You know what I mean? Because if you've kind of got this commitment to, we've got a big plant and it works. I've seen it work. I've seen the output of the stuff. It's well known. But there needs to be some bolt-ons if they're going to ramp up the rare earth side of things, feeding into this U.S. Critical minerals, critical mineral security narrative that's going on out there. And the commitment there is like another couple $100 million. They've got a couple of million cash, but they're going to need to top up at some point in the next year, 2 years on that one. And I think that's their focus, getting that kind of balance and sticking to the knitting. I quite like that. I get that in a down market where there have been M&A opportunities available because there's lots of cash-strapped companies, and for those who can get access to capital and did get access to capital, they've been able to kind of do that roll-up, cheap assets in a way which was clearly very attractive to the market. They've now got to do the hard yards and actually get into production. So my point is, there's a lot of chat about the ability to get into production. And if they can, that's great. Will they be able to do it in any meaningful quantity? I'm talking revenue is the name of the game here. You know, there's a point at which the road runs out, and you've got to stop relying on the market and prove that you can actually generate capital in an environment like this. So I just think there's lots of different models at play here. I'm intrigued to sort of see how much of that is going to involve yet more M&A, and for which companies, possibly some of these development companies. I quote ISO, put that in very strongly in that category, because they are good at getting the money. They're building portfolio. But for people like your UEC, for people like Energy Fuels, for people like Denison, is there a point where it becomes, it's big enough now, go deliver the rest? Or, you know, there's only so much rolling up an M&A you can do, surely.
Yeah, I guess there's a limit to how much you can start stacking on. But they are. I mean, they're very focused on the project that they're focused on. That's the organization they've built as well, let alone the financing. I mean, a lot of them are still looking for money. I mean, it'd be interesting to see whether NexGen reaches out. You know, you talk about the ability to raise capital. You know, I think we almost kind of dismiss NexGen from an acquirer because they're just so focused on that one asset, and anything else seems to water it down. Or distract from it, but they're certainly in a good position to start putting things together. You know, they've got they've got a market cap bigger than anybody.
Well, 3.6 billion US. Yeah, it's punchy, but that's, I mean, they've kind of got this very sort of focused approach, which I think is probably no bad thing. But I think they've got sort of 5 billion Canadian. They've got to prove that they can raise the couple of $1 billion needed to build this thing, and they've got to talk about how they do that and what's the cost of that. Personally, I think, you know, they've got a good run at it. I think they can do that. But I don't know if maybe it's easy to kind of bounce around and talk in generality. So do you want to sort of kind of like run down a sort of list of companies, starting perhaps with UEC, and sort of give us a read on how you view that? Should we do something like that? Let's get a bit of structure into this conversation. Okay, yeah. So UEC. Okay, well, first of all, maybe some for people that don't know UEC so well. When you kind of give us a backdrop, and then talk about how you think they play it going forward.
Well, I mean, obviously UEC is a U.S. company. They were around during the last go round. They were inches away from turning on their facilities when the wave hit Japan, and the market had the floor pulled out from underneath it. So they've kind of been ready for a while. They've been very strong management. Amir has kind of shown himself to be a resilient sort of a leader, and they've done quite well over the last little while. But their assets are ISL in the States. They've done some acquisitions to broaden that, and then they recently, well, not that recently, but they bought a Canadian company, UEX. Which had a number of solid holdings in Canada and in the Athabasca Basin, and they bought the Rough Rider deposit from Rio Tinto. So, as much as they're inches away from production, presumably in the U.S., they do have some solid Canadian assets in the Rough Rider deposit. They've got they picked up a lot of good stuff with UEX, Christie deposit. There's other things up there. One of the early ones they picked up ages ago is called the Diabase Project, which was one of the first things they did. And I think it was when they were still looking for royalties to pick up, because, of course, uranium royalty was spun out of there. So it might be a non-core asset. They might have a few things they could get rid of as well along the way. But, they've got a very solid footprint in Canada as well as the U.S. How far they want to move that, I don't know.
Is it big enough for now?
Is it big enough for now? And that's the point. And to your point, I mean, these people now have to prove themselves. And should they really be running around acquiring more operations and more things, or should they be trying to prove themselves with what they've got currently in front of them? Because that's really what people are watching for and waiting for.
Well, I am. Are you?
Of course.
Terrific. Cheers. No, and the reason I say that, and I think for people looking in here, there's only so much kind of plate spinning you can do. I think the whole entire market, we get it. We get the thesis. Everyone's on board with the thesis. There's more demand coming down the line than there is supply by a huge amount. The gap is widening chasm every single day. We get it. We've seen all the numbers. We get the politics is behind it now. The politicians are behind it now. Fantastic. But some of these guys have got to produce, because to play the game of, well, I'll tell you what, if every day is getting more and more compelling in terms of the supply demand gap, maybe we just sit around and wait. And I think it was certainly my view kind of last year was that there's a point where incentive price had been reached and still no one moved. And then it became a game of poker to sort of see how much of this mobile inventory actually exists, to see how much inventory was being held by the utilities, and maybe we can wait this thing out. But there's a point of slight disbelief starts to hit. And you go, well,
but it does speak to the size of the market that we're talking about. I mean, there's only
tiny.
There's less than half a dozen people who you would call producers, and only 2 of them are actually producing. Their assets are in care and maintenance or standby or whatever you want to call it. So there's a lot of wait and see. But most of those people have produced before to some degree, but it's been so long, it's probably not even the same people.
It's not the same people,
but
that's like having a classic car, or even, quite frankly, a broom. I've had a broom for 30 years. It's had 12 heads and 15 handles, but it's the same broom. It's like we're at a point now where developers need to move to the next phase, or at least explain to me what the value creation event is or business model is. If it's hold out for someone like a UEC to come and buy us, great. Okay, that's a plan. You're out of your control, but it's a plan, and maybe in this kind of mood at the moment, it's a good plan. I don't know, but I for companies like UEC and others, I want to know what their plan is to generate this wealth, because I don't know if continuing to do the same thing over and over will work or not. I don't know. I'm not saying I sit on either side of the fence. I've got no horse in the race,
It's actually waiting for somebody to come and buy us, if I'm a developer, is not a bad plan, especially if you've got a rising tide like uranium, the uranium price. So it's not a bad plan, particularly if you haven't produced before. And I think that they're running out of that, like you say, the spinning plates. So you've got companies that, and we're all told, even from the side of exploration, we're always told, no matter what investor you're talking about, always talk about the fact that you're going to put this thing into production, whether you can or not. That's always
absolutely. It's a running joke.
Yeah. So we're going to put this thing into production. I mean, I've heard explorers who got 2 holes in the ground start talking about, pre-feasibility studies and when they're going to go into production. So there's that. So you keep moving the story forward, but is it really your intention to get to the end, or do you just have to keep looking like you're pushing the ball down the field? And I think it's probably a lot of that. And if that's the case, then companies like a UEC, or Energy Fuels anyways, really should be, stepping up at some point and building another Cameco or something, because a lot of these things really need to be brought together and put into production. Seriously.
Yeah, but another Cameco is,
well, you're not going to get there.
Right, you're not going to get there, right? Because of the type of assets and the kind of blended portfolio that they have, and a track record and the skill sets. All of that kind of good stuff means it's going to be hard to create another Cameco in the real world. On paper, it might look like it and you might claim it. And that's a good game. Again, I'm not saying I know what's right. I'm just saying I want the companies to be more articulate with the plan that I'm being sold, and therefore what am I buying into? Because if I don't know what I'm buying into, I don't really know how to play it. I don't know how to time it. I don't know how to value it. So that's all I'm sort of why I think these exercises are quite good. To, you and me shooting the brazen what could be, should
Your
be,
frustration makes sense. Your frustration
yeah,
makes sense because it has been very easy throughout this game of up and down to just talk about the uranium market. And now that we've seen that value has not been dribbling down into the equities, so I guess we better have a game plan, is probably now just starting to take hold.
We'll be in control, right? Because if it's the company's CEO is playing a game of read the market, try and play the market, that works up until a certain point, because the market will always evolve and change. The opportunities will evolve and change, and you don't want to get necessarily overtaken, or for your business model to stop working, for people to get disinterested or whatever. And I'm not. And again, this isn't certainly a comment about any of these producers we've talked about. It's just a question of what should investors look at? What is and is not important? What are the changing variables throughout this process? I've been in this uranium game again. Well, forget my previous life, incarnation, but this most recent splurge since 2019. The stories haven't really changed or evolved. Like, no one's really producing because they're not incentivized, despite more recently having reached incentive prices. Their numbers, not mine. And I wonder, has that game changed? In which case, should I be looking at these companies slightly differently? That's the question.
I think that, I mean, definitely that time has come. And we talked about this a lot. I mean, there's just, it's the same story year after year after year that these companies are leaning on, and things have got to change. Like, we've got to get up and make something work. So, where do these things come from? If we're going down the list, who's another one who could start picking up these things? Paladin. I was going to say Paladin. Right? There's some good assets over there, either Bannerman or Deep Yellow or what have you. And start putting, geographically, start putting some of this stuff together as well. Particularly if you're a leader, like if you know how to get this stuff into production, take it the last mile.
But again, may not see their balance sheets. There's lots of stresses and strains after 10 years out of the market. It's still got like Paladin, what are they, 2.3 billion US, 3.5 billion Aussie. Potentially viewed as a one-trick pony. At the moment, they need something like fission, I think, because there'll be people that have views on the resource in Namibia. There'll be people that have views on it. I know they've got. Well, you've got they've got Langer Heinrich, right? So is that a one-trick pony? Is it single asset risk, single jurisdiction risk?
Fission's only going to get them so far. Right. I mean, that asset still has a lot of hurdles to leap over before you're going to see any uranium coming out of the ground.
I was talking to a silver company, Silver Corp, a guy called Lon Shaver, CEO, and they've got like 4 big projects, gold projects in China, right? But the market sees them as Chinese and exposed to Chinese risk and single jurisdiction risk, and they've just as a result bought another project in Ecuador, gold project, gold copper project Ecuador. They feel, their words, not mine, they need another asset to get in the minds of the institutional investors, de-risk that project more. And it kind of feels like there's a bunch of that required by companies like Paladin, like Deep Yellow, like, I'd even throw Encore in there a little bit, because they've clearly got skills and access to capital. Perhaps can they spread the focus a bit?
The question comes to how far should they be spreading geographically? I mean, that geographic risk is not a small thing. So, Encore, should they be picking up Peninsula or Laramide?
I hear you. Well, I mean, if you want to go to Encore, for instance, their skill set is obviously well known. Their portfolio, pretty good. But should they be going out and whilst the prices are affordable, whilst some of these assets out there, ISR project have been de-risked for them, and just insert what the market perceives as stronger management, because I think Peninsula's got its it's going through the motions, and they're talking about getting production soon. But I think the market is challenging that CEO's ability to grow from here.
It still needs a lot of money,
and it needs a lot of money, and it's raised a lot of money in difficult times, etc. Like I think Wayne's a good guy. I think he's he's had a few curveballs thrown at him as well, but it doesn't matter. It doesn't matter whether he's a good guy. It doesn't matter if there's curveballs. If the market is perceiving that as where it is today,
there's a few companies that they would be a solid acquisition for.
Yeah. Okay. Yeah,
I mean, it's interesting in the U.S. because the U.S. now, I think it's kind of the support, the government support they're getting in the States. We're not seeing it in cash yet, but it really is growing, and the need is growing there deeper than anybody. And I think that anybody who's domestically producing uranium, or even a little bit of uranium right now in the States, is going to get continued support from all over the place. So it's not a bad jurisdiction to be operating in these days.
Do you see this kind of Wyoming revival happening, or Texas revival? I mean, it depends where. Is there anything? There's not grade wise, nothing's going to compete with the Athabasca.
No,
but in terms of production, do you think the U.S. will pull itself together? Does there need to be a massive roll up across the board in the U.S. get back to its former glory?
That would be the way to make it happen. You'd have to start. You'd really be rolling these things up, and yeah, the focus is ISL, and it makes sense down there because of the grade and because of just the cost and the speed of getting this stuff going. But yeah, they could do with a roll up to get, again, to your point about revenue. They're really limited on some of these assets as to how much revenue they can actually generate at the end of the day.
Then that says to me, our conversation about earlier is, it is the time for M&A here, and do some of these companies still have time to do that? It sounds like yes, if you get into the whole USA thing. Will there be any new entrants? Will there be new money? Or is that unlikely?
And again, every whose balance sheet isn't suffering in terms of the ability to do what we're talking about. So,
tech companies, that's the thing. AI is going to change our fortunes.
Yeah, let's drag them into this. Yeah.
Well, it used to be the Chinese. So, the answer to every single interview that I did was, "Oh, the Chinese will take us out." That was a running joke. But here now, it's the time for the tech companies, and they're billions of dollars of free cash because they need energy for their AI data centers. Are they ever going to go upstream? I don't think so.
No. So maybe what else are we looking at here? Well, again, I do think if this deal doesn't go through with Fission and Paladin, which would be a shame, then you're back looking. Well, then who? Because now they've kind of said, okay, we're open to this, and maybe then we can see NexGen come in and pick it up, because that didn't seem to be on the in the cards at all. Or maybe you see ISO walk in there. Why not? When you look at the value, the value of these companies right now. I mean, none of these things would be easy, but at least you've got Canadian companies buying Canadian companies, and
go ISO. Okay, well, let's kind of flip it around the other way. So who else would Paladin go for? Obviously, there are other African plays to be had as well, some worth less than others and some worth more than others. Positive. Can you see anything happening there?
In Africa?
Paladin.
Well, yeah, certainly in Namibia, we've got Deep Yellow's projects and
Deep Yellow and Bannerman, and obviously, and those are the obvious ones. But I think you've also got Lotus over there in Malawi. Small.
I don't see anybody wanting to dabble in Niger, other than
no.
Well, unless you know what you're doing. I mean, let's face it. I think Global Atomic's been doing an outstanding job of keeping themselves out of trouble in a place where it's hard.
They want this last chunk of money, right? So everyone's waiting for an announcement before Christmas. Can they do it? And what's it cost?
I think that's just an interesting one to watch, because they seem to be so nimble and talented keeping away from the fire, and just plowing forward.
I have huge respect for their ability to do business in country. They are there. They have done some good stuff. They've been getting on with it. They've raised money, even when it's been difficult to raise money. Where I think they're struggling to persuade some people is this last chunk of money. Are they going to be able to get that out of North America to get the build over the line and done and dusted? That's what people are waiting for. That's harder than actually operating in country. And I know, as an ex-banker, when someone said, "Oh, there's been a coup," you walk away. Someone says there's a change up, there's an election coming up, you walk away. And not walk permanently, just sit back and see how this thing plays out. If it'd be good news if Global get this thing done and over the line for sure. And I think they will. I hope they do. But Niger needs that now. Now, will the Americans stump up the cash?
I don't know. I mean, that's where Denison. I mean, when it was Denison that rolled Goviax out, right? Back in the day. Yep. So that's why I don't see Denison really. I mean, they could be an acquirer if they wanted to go abroad, but they seem to spend a lot of time, pulling back in and sticking to Canada. I mean, hell, they owned White Mesa at one point in time, right?
Yeah.
So,
swings around about. So I doubt any money for Niger is going to come from industry, because even their bankers will be. It's not a case of we'll amortize the risk across the whole portfolio. It'd be like that's either Stonewall no, or it's going to be let's wait and see. I don't think anyone's going to sign that one off anytime soon. It's the shame of it. I think Goviax, obviously, I think we're speaking to them recently. They're trying to work out, do the other assets in the portfolio need focusing on clearly, because nothing's happening in Niger. How do people value them and the management team, quite frankly, having not got Niger over the line even before the coup? He was moving too slowly. So they've been marked down a lot. And the management team's got a bit to prove here. And I hope the feasibility study that's coming out with them can go some way to appease those people. We shall see.
I was trying to look at...
Is there any good news? Is there any good news? It's a bit negative. It's business. It's hard.
Business is hard. Business is hard. No, I was also trying to look at some assets that might be some non-core assets that might get shuffled around. I don't know. I could see Paladin getting rid of Michelin in
Canada,
in Newfoundland, in Canada.
Yeah.
Maybe Atha wants to pick that up with their Latitude assets.
I think there's
not much. You don't see much. I think people have got their portfolios kind of in. There's not a lot of non-core stuff hanging around. I don't think.
Is that different from last time around, where it seemed to be any old piece of crap got picked up by scrappy management teams just jumping on the bandwagon? You're not going to see less of that this time around, do you think?
Well, we have. I think we've seen that. They've come and gone, and certainly not to the extent it was the first time around. That was insane. But I mean, we've seen that. We've seen, I'm not even going to start going through the names, but I mean, every month or two, somebody's picking up a non-core exploration asset from somebody in Canada as their qualifying transaction to go public, or to get out of the lithium business, or to do something to reach out. So that's been happening, but certainly not to the degree. I mean, we all know there were hundreds of newly minted uranium companies back in the early mid 2000s, and now we're still dealing in dozens, low dozens. So because it's not that easy. Before, you couldn't keep the money from coming in under the door if you just spoke the word uranium. It's not that way this time around. I mean, the markets are smarter. They get it. They understand uranium, and they certainly didn't 15 years ago. So it's we're acting more like a proper commodity this time around, and the risks are being recognized properly by the market. So we don't see that rush, that mad rush of making a really quick buck by slapping a uranium bumper sticker on your old gold project. So
we are wiser. We are older and wiser than the market. Let's talk about UREnergy, because I quite like John Cash. I think he's done a solid job. No overpromising, just steady getting on with it. It ain't big, I would say that. And I wonder how they behave once this thing is, steadily pumping out the cash. They've got 2 assets. Do they just focus on those? Could they do something once they?
I think they should. They're in the best
producer?
Position to take advantage of
you think
where we are right now. Absolutely.
And in Wyoming, right? So.
And in Wyoming,
but you could have got a cautious conservative CEO there.
Well, let's face it, the assets. I like. Yeah, no, absolutely. But they were the ones that sold off those assets to IsoEnergy as non-core assets. The Anfield asset's been sitting right beside them for the last 20 years as well. So, so that is a question as to how eager are they, or how much into their DNA is taking that step. But they're certainly the ones that are in a position to do so.
Right. Yeah. Okay. Well, that's the producers talked about. So far, it's fairly inconclusive. I'm not sure what to think in any of these cases, and and I think maybe that's no bad thing. But at least we're talking about some of the options, and we should be studying them individually to see what is possible from these current producers out there. But the next raft down is obviously developers. We've talked about NexGen and their focus. Denison Mines perhaps has got a very large portfolio now. Maybe they've played all of the games that they can with the market. I think Dave Cates, particularly smart individual. I liked the fact they bought pounds on the market. I like they picked up the UEX project, and crikey, they played that well. But maybe they've got enough on their hands. Do you think they have?
Well, it's funny. Over the years, they've never stopped exploring. Like they've probably been told to knock it off, because they have spent a lot of money exploring.
Yeah.
But they have kind of divested themselves of things outside of that current project. Of Wheeler, or not Wheeler, Griffin. And that is their focus.
But they've also been talking the game of we're 2 years away from production since I started talking to them in 2019.
For sure.
Right?
Yeah.
And at some point you gotta come on, guys, let's deliver.
Well, I always thought they would be the next one producing. But to your point, it seems to be a rolling 2 years. They're continually making progress, but it is a rolling 2 years, and they really don't have anything else going on anymore that they used to before. It's all in on that project, it seems, right now.
Yeah, but think about it. It's what you said earlier. It's like you've got to talk the game of, we're going to get into production, right? That has a marked effect on people's investor psyche, right? So that's what they've been doing. But again, that can only go on for so long. Unless, of course, he's looking at the price kind of move through the phases in the market, in which case that he's playing that game quite smartly.
I think everybody is, to a certain degree.
Yeah, but I'm trying to make sense of why the 2 years rolling. If it comes back to it, and I think they're going to have to do something soon when it comes to obviously having the license, having permits, having the permissions and social license and all those good things to get into production. Can they technically solve the problem that they've been banging on about, whether it's freeze domes and freeze walls and et cetera, to make sure that everyone's comfortable with that and they can actually deliver on that one? Because if they can't soon, I've kind of lost interest in it, because it would feel that would be the end of the growth story, and it would be you need to start backfilling some of that valuation, and that's never a good place to be. I'm not saying they're there, but I'm saying that could happen.
So if they did start getting a little more acquisitive, that would be questionable because they're not doing what they said they were going to do to begin with. Yeah.
Yep.
Yeah. Yeah.
These are ifs and buts and pots and pans and all of that. I say we've talked about a lot about. I think it's my sort of favorite of the moment. I just love the logic behind how they go about doing it, and obviously this ease of doing deals. Not necessarily, they're not cash deals, but they are getting deals done, and people want their paper. So that's always quite good. And if they do need cash, they definitely got inroads to do that as well. But the portfolio structure is what interests me. They too, as I mentioned last week, being down the 10-year mine, it's clear that team is looking to get that thing into production. It gives them that producer badge and I think that's important. It's not a big mine. It could get bigger based on what they think they want to do down there, and obviously picking up the sheet-ring mill, it really, really, really helps. So they all eyes on them for sure. But
there's an interesting DNA to ISO, right? In that, they were at this for a while. You mentioned before, consolidated uranium didn't, maybe what are they up to? But they've always been of that ilk. We'll pick it up now. We believe so much in the market. 10 years from now, doesn't have to be tomorrow. I mean, everybody's been going at this as though they've got a 2-year window to make hay. They've always gone at it in a much longer term, and it's like they've got a bunch of baseball cards, and yeah, I'll take those two because I think I can get the one I want if I trade those off later. And like they've really been managing the makeup of that portfolio over time, and started by let's just get everything or anything. Something, and now we've got some currency, and we can now start shuffling the deck around and doing what we want to do, or put something intelligent together. So the stuff out in Labrador, the stuff in Quebec, the stuff which they still hang on to, all those things that they've rolled off over time, or then acquired on top of, are now making a lot of sense, right? Where they might not have initially out of the gate.
Being brave enough to get rid of Argentina, I think that makes a lot of sense.
Yeah,
it's like because a lot of people just hold on and they pretend that it's valuable. It's not. It's a bloody distraction. If you monetize it now, let's focus on what's important. So
right,
it's all good. It's all good. Obviously, I mean, some of the other developers out there that obviously saying around. We've talked about the fission uranium and what's been going on there. Yeah, what are the choices if that doesn't get approved? I mean,
what are their choices? Well, they can keep pretending they're going into production. I'm kidding. I mean, again, right? It's tough. It's tough out in that corner of the world because to actually put that thing into production, there's licenses that they still have to get that they haven't gotten into. They're going to need a lot of. There's no facilities out there yet. I think NexGen's really taken a lead over top of them. So what are their options? Well, Cameco. I'm not sure whether Cameco is looking at picking up anything, whether they would be interested in that. NexGen's always been low. I mean, they've always badmouthed each other's assets. So I'm not sure whether NexGen is ready to kind of swallow that and say, okay, we're just kidding. We'll take you, and go at that. But yeah, it's going to. I think if this doesn't go through for fission, they've been hobbled by this transaction, because now they do have to come up with a whole new game plan as to how they're going to move it forward. And it's interesting. We talked about this before, but it's kind of the same thing happened to Denison and fission were supposed to be merged a bunch of years ago, and Denison, fission was actually going to be the new management because I think the Lundins wanted out of uranium, rightly so. And when that didn't go through, Denison kind of had to shudder a bit and figure out, okay, now we need a new plan to go forward because we can't rely on that strategy because it was kind of pulled out from under them, and not by them. It happened on the fission side. So I think fission is going to find themselves in the position of really going to have to sit down and come up with a story or come up with a real plan as to what they're going to do with that asset, because this one kind of will have fallen through.
Yeah. No, it's a tough one. I'm just kind of winging down my little list of that come to mind. And maybe it's bouncing around jurisdictions a little bit. We've talked a little bit about Global Atomics challenges there. I don't think they're in acquisitive mood. They're focused on trying to get themselves financed and, if anything, get taken out themselves. I think at this rate, if the money is not forthcoming out of the North American market, they could look to China. And I don't think Stephen's discounting that or ruling that out, because I think the help that was coming from the zinc and annuity stream just isn't there. It's been, again, between earthquakes and tough zinc markets, it's just not been there when they needed it. So either they get this thing funded and get into production, in which case I think North American acquisition, or if they don't, they'll get the funding out of, by looking east.
Out of the east,
It feels like Deep Yellow, again, sitting there just under $1 billion US market cap, with Tumas Rock and their little Mulga Rock project in Australia. The great man himself is in charge of that one, and I think I'd be surprised if 2/3 of the value of that thing isn't in, the hand of John Borshoff rather than the actual asset. So they've got to start. And John's always said he'll move at his pace, and I think the market believe him to know what the hell he's doing. But not a lot of information out there.
Mm-hmm.
Not a lot of information out there.
Would they get rid of some assets, do you think, and focus on?
There are some smaller projects, but I just don't think so, because they're cheap to hold. They know John and his company, his team know the country quite well. Why would you? I think they can create some value. I mean, John, the other thing to say about John is what is he now? He's probably mid-70s.
Yeah.
Key man insurance would be something that institutional investors would look to. I think what he needs to also start proving up and getting away from this, most of the valuation being on his shoulders, is prove that the team around him, if John wasn't there, would be capable of bringing this thing into production too.
Mm-hmm.
I'd hate for that to happen, but these are things that institutional investors look to. That would be the other aspect of what would happen if John wasn't there. Would the institutions still back this thing? And was certainly at $1 billion US. I'm not sure they would.
Do you think anybody? Yeah.
He's valuable. He's really valuable.
Yeah.
Because if I look down to just down the road from them, Bannerman Energy, we've got a team there who built mines before in country, but they're sitting at 330 million market cap.
Mm-hmm.
Right? Very,
maybe
very
there's your transition.
similar.
Maybe there's your Deep Yellow transition team.
Well, it comes to that whole thing. Namibia is already, the 50% of the projects are owned by the Chinese. Do they just come and pick these things up or not? I suspect the answer is hell yeah.
Mm-hmm.
I see Bannerman as a target. I see Deep Yellow as a target. And there's other smaller players there too up in the north, but that's the trouble, is they're small.
What about Berkeley in Spain? That's a odd corner of the uranium
train wreck of a company that has been. Yeah, look, obviously the former CEO has trotted off to pastures new. We've interviewed him with his new setup over the past 2-3 years. That was a case of over-promise, under-deliver for sure. Spain and uranium, I don't know. Spain and mining is actually pretty darn good. But Berkeley Energy, sitting at 185 million US market cap. People believe there's some value to it. Can they get this thing over the line? Will it be because of not in my backyard? I don't know. Maybe
I'm talking about Namibia. What do you think of Forces' asset there? I mean, they've been riding that pony for a long, long time.
Yeah, 100 million US market cap ish. They won't talk to us. I don't know, and the information they put out is fairly weak. So I don't know. So I'll have to go sit on the fence on that one. People like Dino in the country, perhaps they suggest it's not quite as advertised, but that may be just wishful thinking or jealousy. Who knows? But I'm not going to say anything.
Yeah.
Do you know them?
No, I don't. I don't at all.
Yeah.
I knew them back in the day. I remember them 15, 20 years ago. They were it was quite the hot outfit. And they ran into some trouble of some sort back in the day as well. And kind of went into hiding for a while.
Yeah, and they've been in hiding for quite some time. Over the last 2 years, they had a good run up. End of last year, beginning of this, came off a bit with following uranium price, pretty much. Yeah, I don't know. I don't know them well, so I'm not going to comment. GoviX head down, focused on Matanga in Zambia. That's what they should do. They're not going to be buying anything. They're going to struggle to raise money, so they're going. I think they are prime time takeout. I think that is Chinese again for me. If they're going to get anything out of the share, and I think as a consequence, they'll want to do a deal on Zambia too. So not quite lights out, but it's tough down there. It's tough down there. We've talked about Laramide, haven't we? Yeah. I think the Kazakh asset is particularly exciting.
Laramide? Did you say?
Yeah, Laramide. Yeah. I think that Kazakh asset could be really, really interesting. Let's see how they play that one. It's like Bannerman focused on their own project. They're not in buying mode. I don't think they've got the team who've got the stomach for that.
No. Again, it's a short list. There's not.
It's a really short list.
There's not a lot of pieces on the board to move around. Yeah.
No, so I remember 3-4 years ago saying, is this like the last cycle from 2019 to now? Is this like the last cycle? In so many ways, absolutely not. It is not. Lessons learned.
The market's not moving the same way. People aren't trying to get into it in the same way. There's not the same frenzy about it. And it's left a lot of people that are in this thing kind of scratching their heads.
So what's the takeaway from that kind of run through of all the players? And I mean, mine would be, I bought the thematic. It's taken a lot longer. As I constantly say, if it wasn't for COVID supply chain issues, printing of money, Kazatomprom doing their thing, Russia, Ukraine, Sprott, Physical Uranium Trust. If it wasn't for those things, this thing could drag out another 10 years.
It feels that way. It feels that way.
So how actually, on a fundamental basis, wrong were so many of those early players in 2019? They've now looked like geniuses, of course, but through no foresight, no ability on their part. I would argue, and I don't care if I piss anyone off saying that, but that's the truth, and you've got to own up to that one. Mm-hmm. Maybe that's part of what this is about. It's a lot of very successful billionaires say, it was luck and timing, and I think there's a lot of that has happened in the uranium space.
Right, and I think to your earlier point, it's the story that these companies have been running on to this point is getting tired, and things have to change. They have to start producing. They have to start delivering, and I think there's some consolidation to happen. And I think that may have to wait until the world truly looks up and goes, okay, this is not happening. Somebody needs to really pick it up and take it that last mile. And there's a few people out there, the UECs of the world, the ISOs of the world, or what have you, that seem to have that, mindset that let's truly.
I think the space is going to need it. The space is going to need it because the developers need to show that they can access the capital to get into production and then get into production and then consistently stay in production. They need to be able to do that if we're going to get anywhere close to some of the supply numbers being banded around, which I think are all a bit ludicrous. And I think the export codes are going to need. No, I'll throw you in there too. You're going to need a kindly gentleman to come along and say, well, here's some money because I like some of what you've got here as well, because the retail market, the equity market is not back yet. So if you can suck it up,
we need to hang on and find
great.
different ways to finance our future. Yep.
There you go. And I look forward to hearing what you've got to do about that one. But we'll do that another time. Look, I've got to shoot. I've got to get on a call with someone else now. Look, this was really for my benefit, this conversation, and I hope we've recorded it, and I hope that other people might sort of find it interesting, might stimulate some conversations and debate about who they, think the key players are, and how those companies choose to play what's left of this long rumbling story. So, Chris, I'll see you next week.
Very good. Have a good one.